Question 1. Which of the following principles of insurance ensures that an insured party does not profit from a loss but is restored to their financial position prior to the loss? A. Subrogation. B. Indemnity. C. Contribution. D. Utmost good faith. Answer: B. Indemnity. Explanation: the principle of indemnity is fundamental in insurance, which states that the insured should not profit from a loss but should be restored to their original financial condition prior to the loss. This principle prevents overcompensation and helps maintain the balance of risk sharing among insured parties. Subrogation allows the insurer to recover costs from third parties responsible for a loss after compensating the insured. Contribution applies when multiple policies cover the same risk, ensuring that each insurer pays its share of the loss. Utmost good faith requires both parties in an insurance contract to act honestly and disclose all material facts. Question 2. In Tennessee, an adjuster is reviewing a claim where the insured was injured on a property owned by someone else. The adjuster must determine whether the property owner can be held liable. Which of the following factors would most likely affect the determination of liability? A. The age of the injured party. B. The presence of warning signs on the property. C. The time of day the injury occurred. D. The economic status of the property owner. Answer: B. The presence of warning signs on the property. Explanation: liability in premises liability cases often hinges on whether the property owner took reasonable steps to ensure the safety of their property. If adequate warning signs were present, it could indicate that the property owner fulfilled their duty of care, potentially reducing or eliminating liability. The age of the injured party may be relevant in some contexts, but does not directly influence liability unless it relates to the standard of care. The time of day could matter if it relates to visibility or safety concerns, but is secondary to the property owner's duty to maintain a safe environment. The economic status of the property owner is irrelevant to liability. Liability is based on the actions taken to prevent harm, not financial means. Question 3. Scenario-based. Mr. Thompson has filed a claim for water damage in his home due to a burst pipe. During the investigation, the adjuster finds that Mr. Thompson did not maintain his plumbing system adequately, leading to the failure. What should the adjuster consider when determining the coverage for Mr. Thompson's claim? A. Whether Mr. Thompson attempted to fix the pipe himself. B. The extent to which the water damage exceeds his deductible. C. Whether Mr. Thompson had prior claims for plumbing issues. D. The policy exclusions related to maintenance and neglect. Answer: D. The policy exclusions related to maintenance and neglect. Explanation: when determining coverage for claims like water damage, the adjuster must review the policy for specific exclusions regarding maintenance and neglect. Most insurance policies contain clauses that exclude coverage for damages resulting from the insured's failure to maintain their property properly. Mr. Thompson's attempt to fix the pipe may not impact the adjuster's decision, since the underlying issue was the lack of adequate maintenance. The extent of damage exceeding the deductible is important, but does not affect the applicability of exclusions. Previous claims could provide context, but do not directly dictate the coverage of this specific claim unless they reveal a pattern of neglect. These questions challenge students to apply their knowledge and understanding of insurance principles, liability concepts, and practical applications in claims adjusting. Question 4. Which of the following is the primary purpose of the law of large numbers in insurance? A. To reduce moral hazard by spreading risk. B. To ensure an equal distribution of premium payments. C. To predict future claims with greater accuracy based on past data. D. To calculate the underwriting profit margin for an insurer. Answer: C. To predict future claims with greater accuracy based on past data. Explanation: the law of large numbers is a fundamental concept in insurance, stating that as the number of exposures policyholders increases, the actual loss experience will more closely approximate the expected loss. This allows insurers to predict future claims with greater accuracy. Moral hazard refers to the risk of an insured taking on more risk because they have insurance, and this is not directly reduced by the law of large numbers. Distributing premiums equally or calculating underwriting profits are unrelated to this principle. Question 5. What is the primary reason for requiring adjusters to follow the ethical guidelines set by the Tennessee Department of Commerce and Insurance? A. To ensure fair and honest treatment of all insurance policyholders. B. To guarantee that adjusters maximize insurer profits. C. To prevent insurance companies from being held liable in all cases. D. To allow adjusters to conduct investigations without legal oversight. Answer: A. To ensure fair and honest treatment of all insurance policyholders. Explanation: The ethical guidelines set by the Tennessee Department of Commerce and Insurance ensure that adjusters act with integrity, transparency, and fairness in handling claims. The goal is to protect policyholders from potential exploitation and ensure a fair claims process. While profit maximization is an important goal for insurance companies, it is not the purpose of the ethical guidelines. The guidelines do not shield companies from liability. Instead, they promote fair claims handling. Investigations should always be conducted with legal oversight, not without it. Question 6. Scenario-based. Mrs. Davis has filed a claim for damage to her car caused by a hailstorm. The adjuster, after reviewing the car's history, finds that the damage is more consistent with an accident than with a hailstorm. What should the adjuster do next? A. Approve the claim, as the damage is consistent with a hailstorm. B. Deny the claim, as the damage seems to be from an accident. C. Ask Mrs. Davis to provide further evidence supporting her claim. D. Recommend that Mrs. Davis seek a second opinion from a third-party expert. Answer. C. Ask Mrs. Davis to provide further evidence supporting her claim. Explanation. The adjuster should ask the policyholder for additional evidence to support the claim, especially if there is a discrepancy between the reported cause of the damage and the actual condition of the vehicle. This can include photographs, witness statements, or other documentation to clarify the cause of the damage. Proving or denying the claim without sufficient evidence could lead to a wrongful decision. Recommending a second opinion may be helpful but should come after attempting to resolve the issue with the policyholder's cooperation. Denying the claim outright without gathering more information would be premature. Question 7. Which of the following terms refers to a situation where an insurer has the right to recover the amount paid to a policyholder from a third party responsible for the loss? A. Subrogation. B. Contribution. C. Indemnity. D. Rescission. Answer. A. Subrogation. Explanation. Subrogation is the process by which an insurer, after compensating the insured for a loss, assumes the right to recover that amount from any third party that is legally responsible for the loss. This prevents the policyholder from being compensated twice for the same loss. Contribution refers to how insurers share the financial responsibility when multiple policies cover the same loss. Indemnity refers to restoring the insured to the same financial position as before the loss, not recovering costs from third parties. Rescission involves cancelling a policy due to misrepresentation or fraud. Question 8. In Tennessee, which of the following would typically NOT be covered under a standard homeowner's insurance policy? A. Fire damage to the house. B. The liability for a guest's injury on the property. C. Flood damage caused by a heavy rainstorm. D. Theft of personal property from the house. Answer. C. Flood damage caused by a heavy rainstorm. Explanation. Standard homeowners insurance policies typically exclude flood damage, which is generally covered by a separate flood insurance policy. Floods caused by rainstorms, rise in water, or other water-related incidents are excluded under most homeowners policies. Fire damage and theft are typically covered under homeowners policies. Liability for injuries on the properties are low, a standard coverage in most policies. Question 9. Which of the following statements regarding Tennessee workers' compensation insurance is true? A. Workers' compensation is optional for employers in Tennessee. B. Workers' compensation only covers medical expenses, not lost wages. C. Workers' compensation covers work-related injuries regardless of who was at fault. D. Workers' compensation is only available to employees of large companies. Answer. C. Workers' compensation covers work-related injuries regardless of who was at fault. Explanation. Workers' compensation is a no-fault insurance system that provides benefits to employees who suffer work-related injuries or illnesses, regardless of who is at fault. Workers' compensation is mandatory for most employers in Tennessee, especially if they have 5 or more employees. It covers both medical expenses and lost wages resulting from work-related injuries. Workers' compensation is available to employees of all sizes of companies as long as the business meets the state's requirements. Question 10. Which of the following is a typical responsibility of an adjuster when evaluating property damage? A. Determining the insurance company's profitability. B. Negotiating settlement amounts with the claimant's attorney. C. Estimating the cost of repairs and assessing the extent of the damage. D. Making final decisions on the policyholder's coverage eligibility. Answer. C. Estimating the cost of repairs and assessing the extent of the damage. Explanation. One of the key responsibilities of an adjuster is to evaluate the extent of property damage and provide an accurate estimate for repairs or replacement. This helps ensure that the policyholder receives fair compensation. Determining an insurance company's profitability is not within the adjuster's role. Negotiating settlements typically involves both the adjuster and the insurer, not just the adjuster alone. Coverage eligibility decisions are made based on policy terms, not directly by the adjuster, though they may provide information for such decisions. Question 11. Which of the following is an example of an intentional tort that an adjuster may encounter when handling liability claims? A. A person driving under the influence of alcohol causing an accident. B. A person intentionally damaging another person's property. C. A person slipping and falling in a store due to wet floors. D. A person being injured during a sporting event due to unsafe conditions. Answer. B. A person intentionally damaging another person's property. Explanation. An intentional tort occurs when someone intentionally engages in behavior that harms another person. In this case, intentionally damaging property is an intentional act that could lead to a liability claim. Driving under the influence or slipping and falling are examples of negligent behavior, not intentional torts. Injury during a sporting event could be related to assumption of risk or negligence, but is not classified as an intentional tort. These questions cover advanced topics and scenarios designed to test students' deep understanding of the principles and practical applications involved in claims adjusting for the Tennessee Adjuster License exam. Question 12. Which of the following best describes the principle of indemnity in insurance? A. The insured is compensated for the actual amount of the loss up to the policy limit without any deductions for depreciation. B. The insured is restored to the same financial position they were in prior to the loss, but with no consideration for policy limits. C. The insured is paid the actual value of the loss, but with depreciation subtracted from the amount of the payout. D. The insured is compensated for a higher amount than the actual value of the loss to ensure they profit from the claim. Answer. C. The insured is paid the actual value of the loss, but with depreciation subtracted from the amount of the payout. Explanation. The principle of indemnity is designed to ensure that an insured person is not able to profit from an insurance claim, but instead is restored to the financial position they were in before the loss occurred. In most cases, the compensation will be the actual cash value (SEV) of the property, which includes depreciation. Option A and B are incorrect because they do not reflect the necessary depreciation consideration in the payout. Option D is wrong because indemnity is not about profiting, but about making the insured whole again. Question 13. Which of the following could result in a claim being denied under an insurance policy? A. The damage was caused by a covered peril, but the policyholder failed to report it within the specified time frame. B. The damage occurred due to a natural disaster and the policyholder did not purchase flood insurance. C. The policyholder forgot to pay the premium, but the policy lapsed a month before the loss occurred. D. The insured failed to maintain the properties required under the policy's terms. Answer. C. The policyholder forgot to pay the premium, but the policy lapsed a month before the loss occurred. Explanation. Insurance policies require that premiums be paid to maintain coverage. If the policy has lapsed due to non-payment, then the insurer is generally not obligated to cover any claims, regardless of the cause of loss. Option A. Late reporting of claims may result in delayed processing, but it does not always lead to a denial unless stated in the policy. Option B. A flood is typically not covered under a standard homeowner's policy unless a separate flood policy is purchased. Option D. Failure to maintain the property may affect the settlement amount or lead to a reduction in coverage, but it's not necessarily an automatic denial unless the lack of maintenance directly caused the loss. Question 14. Scenario-based. Mr. Harris was in a car accident where the other driver was at fault. Mr. Harris filed a claim with his own insurance company to cover the repairs to his vehicle. The insurance adjuster calculates the repair cost, but Mr. Harris believes the amount is too low. What should the adjuster do next? A. Inform Mr. Harris that the insurer's decision is final and no further negotiations are allowed. B. Reassess the repair estimate by consulting with a third-party expert or repair shop and negotiate a fair settlement. C. Deny the claim outright because the other driver is at fault and only the other driver's insurer is responsible for the repair. D. Recommend that Mr. Harris settle the claim for the amount offered and not dispute the decision. Answer. B. Reassess the repair estimate by consulting with a third-party expert or repair shop and negotiate a fair settlement. Explanation. In the case of a disagreement over repair costs, the adjuster should revisit the claim, possibly consult third-party experts, such as repair shops, and engage in negotiations with the policyholder to ensure the settlement is fair and reflects the true cost of repairs. Option A is incorrect because adjusters should remain open to further communication and adjustments if warranted. Option C is wrong because an adjuster should assist the policyholder in obtaining the appropriate repair amount even if the other driver is at fault. Option D would not be appropriate as the adjuster should aim to reach a fair settlement, not push for a quick resolution. Question 15. Which of the following is typically considered an exclusion under a standard homeowner's insurance policy? A. Damage caused by fire. B. Theft of personal property. C. Earthquake damage. D. Liability for a visitor's injury on the property. Answer: C. Earthquake damage. Explanation: a standard homeowner's insurance policy typically excludes coverage for earthquake damage. Homeowners can purchase separate earthquake coverage to cover such perils. Fire damage, theft, and liability for visitor injuries are usually covered under a basic homeowner's policy. However, specific conditions and exclusions may apply. Question 16. Which of the following describes comparative negligence in relation to a liability claim? A. The plaintiff's damages are reduced based on the degree of fault assigned to them for the accident. B. The defendant is fully responsible for the accident regardless of the plaintiff's actions. C. The damages are divided equally between the parties involved in the accident. D. The plaintiff cannot recover any damages if they are found to be partially at fault for the accident. Answer A. The plaintiff's damages are reduced based on the degree of fault assigned to them for the accident. Explanation: comparative negligence reduces the amount of damages the plaintiff can recover in proportion to their degree of fault in the accident. In some states, the plaintiff's recovery can be reduced, or they may not recover if they are found to be more than 50% at fault. Option B is incorrect because the plaintiff's actions are considered in comparative negligence. Option C does not accurately describe comparative negligence, which adjusts based on fault, not equally dividing damages. Option D is only applicable in contributory negligence jurisdictions, not in comparative negligence. Question 17. What is the purpose of the utmost good faith principle in insurance contracts? A. To ensure that both the insurer and the insured fully disclose all relevant facts during the contract formation. B. To protect the insurer from claims made by fraudulent policyholders. C. To provide a clear and transparent explanation of policy terms and conditions. D. To ensure that policyholders receive the highest possible payout for claims. Answer A. To ensure that both the insurer and the insured fully disclose all relevant facts during the contract formation. Explanation: the utmost good faith principle requires both the insurer and the insured to act honestly and disclose all material facts related to the insurance contract. This ensures that the insurer can assess the risk properly and set appropriate terms for coverage. Option B is a consequence of utmost good faith, but it doesn't fully describe the principle. Option C is a good practice, but it is not the core of utmost good faith. Option D is incorrect because the principle focuses on honesty and full disclosure, not on maximizing payouts. Question 18. Which of the following would be considered a third party in an insurance claim? A. The person who purchases the insurance policy. B. The insurance agent who sells the policy. C. The person who is injured by the policyholder and files a liability claim. D. The insurance company that issues the policy. Answer: C. The person who is injured by the policyholder and files a liability claim. Explanation: a third party refers to someone who is not the policyholder or the insurer, but who is affected by the actions of the insured and has a legal right to file a claim against the policyholder's insurance. In this case, the person who is injured is the third party claimant. Option A and B refer to primary parties involved in the insurance contract, not third parties. Option D is incorrect because the insurance company is a primary party in the contract. Question 19. What does subrogation allow an insurance company to do after compensating the insured for a loss? A. Recover the payment amount from the insured's other insurers. B. Pursue recovery of the payment amount from the third party responsible for the loss. C. Refund the premiums paid by the insured for the policy. D. Adjust the claim based on the insured's deductible. Answer: B. Pursue recovery of the payment amount from the third party responsible for the loss. Explanation: subrogation is the process that allows an insurance company to recover the amount it paid for a claim from a third party that was responsible for the loss. This prevents the insured from being compensated twice and helps to mitigate the insurer's costs. Option A is incorrect because subrogation involves third parties, not other insurers. Options C and D are unrelated to subrogation. Question 20. Which of the following is the primary role of an insurance adjuster during the claims process? A. To represent the policyholder in legal disputes with the insurer. B. To investigate the claim, evaluate the damage, and determine the insurer's liability. C. To provide financial advice to the policyholder about how to settle the claim. D. To create insurance policies based on the information provided by the answer. B. To investigate the claim, evaluate the damage, and determine the insurer's liability. Explanation. The primary role of an insurance adjuster is to investigate claims, assess the damage or loss, and determine how much the insurer should pay for the claim based on the policy terms and coverage. This includes gathering information, reviewing evidence, interviewing witnesses, and calculating compensation for the policyholder. Option A is incorrect because the adjuster does not represent the policyholder in legal disputes. This would typically be the role of an attorney. Option C is also incorrect because the adjuster's role is not to give financial advice but to evaluate the claim in line with the policy's terms. Option D is incorrect because creating insurance policies is the responsibility of the insurer or an underwriter, not the adjuster. This concludes the set of 10 challenging questions for the Tennessee Adjuster License Exam. Let me know if you'd like additional practice questions or further assistance. Question 21. Which of the following best describes the utmost good faith principle in insurance contracts? A. The policyholder must fully disclose all material information to the insurer even if it may not be favorable. B. The insurer must act in good faith when denying a claim, regardless of policy terms. C. Both parties must disclose only relevant information as stated in the contract. D. The insurer has the right to withhold information from the policyholder to protect their interests. Answer A. The policyholder must fully disclose all material information to the insurer even if it may not be favorable. Explanation. The principle of utmost good faith requires both parties in an insurance contract, the insurer and the insured, to act with honesty and fairness. The policyholder has a duty to disclose all material facts that could affect the insurer's decision to provide coverage or settle a claim, even if that information could potentially be unfavorable to the policyholder. Option B is incorrect because the insurer's duty is to act fairly but within the bounds of the policy terms, not irrespective of those terms. Option C is incorrect because both parties must disclose all material information, not just the relevant facts as outlined in the contract. Option D is incorrect because the insurer is required to be transparent with the policyholder regarding coverage, exclusions, and claims. Question 22. An adjuster is tasked with investigating a property damage claim. Upon inspection, the adjuster finds that the damage was partially caused by an excluded peril, but there is also damage from a covered peril. What should the adjuster do in this situation? A. Deny the entire claim, as the damage is partly due to an excluded peril. B. Approve the entire claim, as the damage is partially caused by a covered peril. C. Split the claim and approve only the portion of the damage caused by the covered peril. D. Investigate further to determine if the exclusion applies to the entire damage. Answer. C. Split the claim and approve only the portion of the damage caused by the covered peril. Explanation. When damage involves both covered and excluded perils, the adjuster should split the claim, approving only the portion of the damage attributable to the covered peril. This is consistent with the principle of indemnity, which ensures that the insured is compensated only for their actual loss and not for damages excluded under the policy. Option is incorrect because only the damage caused by the excluded peril needs to be denied, not the entire claim. Option B is incorrect because it disregards the exclusions in the policy. The adjuster can't approve damage from an excluded peril. Option D is incorrect because the adjuster should focus on splitting the claim between covered and excluded damage, not investigating further if the exclusion applies to the entire damage. Question 23. Mr. Simmons has a homeowner's insurance policy with a $500 deductible. His home sustained $6,000 in damage, of which $1,500 is caused by a peril covered under the policy and $4,500 is caused by an excluded peril. How much will the insurer pay on the claim? A. $6,000. B. $4,500. C. $4,000. D. $1,500. Answer. C. $4,000. Explanation. The insurer will pay for the portion of the damage caused by a covered peril minus the deductible. $1,500 damage caused by the covered peril is subject to the $500 deductible. Therefore, the payment will be amount equals $1,500. 500 equals 1,000. Thus, the insurer will pay $1,000 for the covered portion. The excluded $4,500 is not covered by the policy. Option is incorrect because the damage caused by the excluded peril will not be covered. Option B is incorrect because the insurer only covers the damage caused by the covered peril, not the excluded peril. Option D is incorrect because only the damage from the covered peril is eligible for payment, and after deducting the deductible it is $1,000, not $1,500. Question 24. Which of the following is not a responsibility of an insurance adjuster during the claims process? A. Investigating the cause of the loss or damage. B. Negotiating settlements with third parties on behalf of the insurer. C. Defending the insured in court against lawsuits. D. Determining the value of the loss based on policy coverage. Answer: C. Defending the insured in court against lawsuits. Explanation: an insurance adjuster's primary role is to investigate claims, assess damages, and determine how much the insurer should pay based on policy terms. Adjusters do not defend insured parties in court. That is the role of the insurer's legal team or an attorney. Option A is incorrect because investigating the cause of loss is a key part of the adjuster's job. Option B is incorrect because negotiating settlements with third parties is often part of the adjuster's duties. Option D is incorrect because determining the value of the loss based on policy coverage is one of the core responsibilities of the adjuster. Question 25. Which of the following statements is true regarding subrogation in insurance? A. Subrogation allows the insurer to recover costs from a third party responsible for the damage after paying the claim to the insured. B. Subrogation requires the insurer to settle the claim without pursuing any recovery from third parties. C. Subrogation gives the insurer the right to deny payment to the insured if another party is liable. D. Subrogation applies only to property insurance policies. Answer: A. Subrogation allows the insurer to recover costs from a third party responsible for the damage after paying the claim to the insured. Explanation: subrogation is the process by which an insurer, after paying a claim to the policyholder, seeks to recover the amount paid from a third party that is responsible for the damage or loss. This ensures that the insurer is not financially burdened by the fault of another party. Option B is incorrect because subrogation is specifically about seeking recovery from third parties. Option C is incorrect because subrogation does not give the insurer the right to deny payment. It is about recovery after payment. Option D is incorrect because subrogation applies to various types of insurance, not just property insurance. Question 26. Which of the following best defines the law of large numbers in insurance? A. It refers to the fact that larger insurance companies are more likely to face catastrophic losses. B. It is a principle that helps insurers predict losses by observing the results of many similar risks. C. It describes the concept of pooling risk among policyholders in a single contract. D. It states that larger premiums result in fewer claims paid by the insurer. Answer: B is a principle that helps insurers predict losses by observing the results of many similar risks. Explanation: the law of large numbers is a statistical principle that states that as the number of similar risks increases, the actual results, e.g., claims, will more closely match the expected results. This allows insurers to predict losses more accurately, which is essential for setting premiums and ensuring financial stability. Option is incorrect because the law of large numbers helps predict losses, not increase the risk of catastrophic losses. Option C is incorrect because the law of large numbers is about predicting losses over a large group, not pooling risks within a single contract. Option D is incorrect because the law of large numbers is about the relationship between risk and prediction, not about premiums or the number of claims. Question 27. Ms. Jenkins files a claim for a car accident under her auto insurance policy. After the adjuster investigates, it is found that the accident was due to Ms. Jenkins' own negligence. However, the insurer still pays the claim. What is this an example of? A. Comparative negligence. B. Contributory negligence. C. No-fault insurance. D. Assumption of risk. Answer: C. No-fault insurance. Explanation: no-fault insurance is a system in which an insured party is compensated for their injuries and damages regardless of who was at fault for the accident. This type of insurance typically covers medical bills and other costs irrespective of negligence. Option is incorrect because comparative negligence assigns fault based on the percentage of responsibility, which would affect the payout. Option B is incorrect because contributory negligence would typically bar a claim if the insured was partially at fault. Option D is incorrect because assumption of risk involves voluntarily taking on the risk of a situation. Question 20. Which of the following is true about workers' compensation insurance? A. It covers only medical expenses related to workplace injuries. B. It is designed to provide compensation for injured workers regardless of fault. C. It only applies to injuries that occur on the employer's property. D. It provides compensation for lost wages but not for medical expenses. Answer. B. It is designed to provide compensation for injured workers regardless of fault. Explanation. Workers' compensation insurance is designed to compensate employees for injuries that occur in the course of their employment, regardless of fault. This system is based on the principle of no-fault compensation, meaning workers do not have to prove that their employer was negligent to receive benefits. The benefits typically include medical expenses, compensation for lost wages, and rehabilitation costs. Option is incorrect because workers' compensation covers more than just medical expenses. It also covers lost wages, rehabilitation costs, and other related expenses. Option C is incorrect because workers' compensation applies to workplace injuries and illnesses, whether they occur on or off the employer's premises, as long as the injury is work-related. Option D is incorrect because workers' compensation typically covers both medical expenses and lost wages, not just one or the other. Question 29. Which of the following is an example of a moral hazard in insurance? A. A person buying insurance after realizing their property is in imminent danger of damage. B. A person who is insured against theft leaving their car unlocked in a high crime area. C. An insurance policy that covers flood damage but not earthquake damage. D. A person regularly maintaining their property to avoid damage and losses. Answer. B. A person who is insured against theft leaving their car unlocked in a high crime area. Explanation. A moral hazard occurs when an insured party engages in risky behavior or actions because they know they are protected from the consequences by insurance. In this case, the person leaves their car unlocked in a high crime area because they know their theft insurance will cover the loss, which is a classic example of moral hazard. Option is an example of adverse selection, not moral hazard, where someone buys insurance after risk has increased. Option C is an example of policy exclusion and not a moral hazard. Option D is an example of responsible behavior which minimizes risks, not moral hazard. Question 30. Which of the following types of insurance provides coverage for a policyholder's business in the event of a major disaster that halts operations? A. General liability insurance. B. Business interruption insurance. C. Property insurance. D. Professional liability insurance. Answer. B. Business interruption insurance. Explanation. Business interruption insurance is designed to cover the loss of income that a business suffers after a disaster, such as a fire, earthquake, or other events disrupts its operations. It helps businesses recover by covering ongoing expenses and lost revenue during the period of interruption. Option is incorrect because general liability insurance covers bodily injury, property damage, and personal injury claims but does not address business interruptions. Option C is incorrect because property insurance covers physical damage to property but does not cover lost income due to operational disruption. Option D is incorrect because professional liability insurance covers claims of negligence or malpractice related to professional services, not business interruption.